What's up, guys? This is Corey, also known as QC Rideshare. Just hitting you up with the latest video, the first one of 2017. I was kind of going back and forth on what I should do a video on, and I thought that the best video that I could do to help educate people about how the rideshare industry works is one on insurance. Now, just as a pre-qualifier, my background is in insurance. I once ran my own insurance agency. I worked for a Fortune 500 company in their commercial department for some time. And so when it comes to insurance, I understand how this works on a level that not everyone can. So I think that I'm pretty confident in what I know about how the rideshare industry insurance works. So I'm going to cover two things. A, how your insurance views rideshare. And B, what happens if there is an incident and you have to bring in your insurance from either Uber or Lyft or any of these other rideshare or gig economy type services. So first, unless you specifically have a policy that includes or doesn't exclude ride sharing, you're not going to be covered. And in addition to that, once your insurance company finds out that you are in the rideshare industry, you will probably be dropped at your next available renewal. I'll give you an example. So I'm in North Carolina, and I had Geico insurance. Geico in North Carolina excludes rideshare. So, and I kind of knew that because when I looked at some of the companies that were doing rideshare, Geico wasn't listed. And so when it comes to an issue, say I were to get into an accident or or a claim will come up, the first thing that would happen is Geico is going to ask me, was I participating in any ride sharing? Now, some people may say, well, you just tell them no and that you were doing something else. Well, you can do that, but you can also be prosecuted for insurance fraud. It is insurance fraud when you lie to an insurance company, which is a felony. Excluding going that route, if you were honest with them, they will let you know that you probably need a commercial policy. Commercial policies are very cost prohibitive in most areas, and are in some areas a little bit harder. Sometimes you have to have an entity, you have to have a vehicle registered as a commercial vehicle, which adds a lot of expense. So the better option, and I'm going to try to link to this in the description, the rideshare guy on his website has a list of article on companies state by state that either offer rideshare specific policies or companies that don't exclude rideshare. So in North Carolina, Liberty Mutual is the only company in North Carolina that does not exclude rideshare. So if you were a driver in North Carolina, you probably want to be with Liberty Mutual, because if something happens, you don't want to end up getting dropped. Second, how Uber and Lyft view an incident. So Uber and Lyft have multiple levels of coverage. So if you were online and you don't have a ride, you have one level of coverage. If you were online and you were headed to a ride, you have another level of coverage. If you are online and you have the passenger in your vehicle, there is a third level of coverage. Depending on the situation when the incident occurs is going to depend on your level of coverage. What I would suggest when it comes to your financial budgeting and understanding how your finances are going to work, I would suggest that you have whatever is the largest amount of the largest amount of the deductible. So if, say, the largest deductible is $2,500, you kind of need to have that stashed away somewhere, because if something happens, you're going to be responsible for that. And so I did this. I think that if you take the time to understand the insurance piece, it will give you peace of mind, because you know you're covered and how you're covered. Because if you get into a situation and you get into an accident, and let's just say that the company never, you don't want to put a claim on your personal insurance that should be going to Uber and Lyft. You also don't want to find out that you're going to get dropped because you're doing rideshare. And trust me, these companies know when, when they find out your mileage that's on your vehicle to update their records, and you went from 100,000 last year, now you're at 140,000. They know that you're using your vehicle for business purposes. Now, whether you're going to be open and honest with them, that's something different. But you need to go ahead and understand how the insurance works on your policy. So I encourage you to two-part. I wouldn't call my current insurance and say, hey, do you cover rideshare? Wouldn't do that. Because once that's reported, they can go ahead and they can underwrite you a little bit differently. What I would do first, I would get a quote from a company that I know does not exclude rideshare. I would go ahead, get the quote, get all the information, all the way up into taking out the policy, call your existing insurance company, find out if they will exclude rideshare. If they do, then I would start the process of making the change to a company that's not going to. I think because that's going to protect you, protect your family's interests, and protect your business. So let me know what you think. Let me know how you deal with insurance in the comments. Let me know if you have any questions. Like I said, for a time, I actually still think it's still active. I was licensed as a commercial insurance agent in all 50 states, so I can handle a number of questions. I'm not going to give any specific advice to anybody just because of liability issues, but I can give you an understanding of what you're dealing with. But again, let me know what you think. Please subscribe if you haven't already. Share this with a friend. If you've already subscribed, please share the video. The rideshare community is huge. I thank all my subscribers out there. You guys have been awesome. Some of the feedback has been great. Until the next one, I hit you.